Hey everybody, so today I'm talking about 88 Energy Limited, which is an oil and gas exploration company in Australia with the ASX ticker code 88E. As you may know, this stock has currently taken off. It has gone sky high. The stock price is honestly booming. So this is all from a recent announcement on their operations activities. There was some pretty good news. I'm not going to go that in depth, but it was just mentioning some quite good discoveries. Typically when there's a good discovery of any sort, that'll really boost with the news, but then it's more just going along and saying, well, is the company, number one, a good, fundamentally strong company, and then number two, how good is the good news, and is it really good enough to really make the stock price triple? So like I said, I really do think that companies in this industry are built on whenever they can find great discoveries just like this, and these different lots of good news which can help them out for years and years. However, with that being said, I still feel like there are a lot of people that bought into 88 Energy simply because of the hype, almost like a pump, just in all Facebook groups, in a lot of different chats, on different social medias, and everyone is talking about 88 Energy. So I do feel like there are a few people that bought in without knowing what they're doing simply because of hype. So I just wanted to make this video where I'm talking about some of their fundamentals and their financial health to help out some viewers. So as of the 5th of April, they have a current stock price of $3.83 and an impressive market capital of $864 million. So now there really was some data missing, but I wanted to talk about their different revenues over the years, and I wanted to talk about December 2015. However, it wasn't available, so instead I'm going to be talking about September 2015. I'll put that up now. And as you can see, their revenue was actually a loss of $39,000, and the earnings was also a loss of $16 million. So now I'm not going to lie, these aren't great numbers at all. However, you do need to remember two factors. That's number one, that the type of industry they're in, it's sort of an industry where you really do need to spend and invest a lot of your own money and time until you strike big. And then the second factor is that a lot of penny stocks will be running at a loss for several years. So then next, we're going to talk about December 2020 and where their revenue and their earnings were. So I'll put that up now, and as you can see, their revenue was actually a very nice gain of $241,000, which is a great improvement. However, their earnings were unfortunately a loss of $22 million. Now that's a little bit daunting since their losses were even greater in 2020. However, I don't personally think that that is a factor that you can simply just name this company as a bad company. I think that that really is just again due to the industry, and I don't think you can be expecting amazing numbers for a penny stock anyway. You also need to remember that they didn't have this discovery announcement back in 2020, so it'd be very interesting to see their next financials. So now they actually have a negative return on equity of 37.4%, however that's not a big surprise because they're currently running unprofitable like many penny stocks, so don't get me wrong, that's not really a big deal. So I do like to look at a balance sheet to just get a general idea of where all their money is actually going and where it's currently at, so I'll put that up now. And personally, I wasn't too impressed at all, but at the same time, it's nothing bad by any means. The short-term assets easily exceeded the short-term liabilities, which is honestly very great. However, the long-term assets were slightly less than the long-term liabilities, which isn't great. However, it wasn't exactly too far behind, so hopefully that's nothing at all to worry about. They are unfortunately carrying some debt of $20.8 million. However, I don't think that's a big deal due to their debt-to-equity ratio of 35.3%, which is pretty decent, and I'd say it's rather satisfactory, especially since it's been reduced from 51% just 5 years ago. So now, it was actually a little bit hard to find data, and there wasn't too many more financials and fundamentals for me to talk about. However, I did want to state that this isn't exactly a case where it's run by fundamentals. This isn't exactly a fundamentally strong company, not to the point where people are investing in it. People are simply investing because of the announcement. And I completely understand why. There may be some people which are investing because of the hype, and I don't think that's ever really a great idea. I think it's better to look at the company, the announcements, and where you think it can go, rather than just because of people pumping it. So just finally, I wanted to quickly look into the insider trading, which I was quite actually glad to see that about 3 individuals bought about $70,000 worth of shares in 88 Energy. I initially thought that this was likely due to the announcement. However, I was quite wrong, and this was actually from previously in the year, which was January, before the announcement was released. So thank you all for watching. I didn't really want to take a stance here on whether I think it's a good opportunity to buy, whether I think it was a good opportunity to buy, or anything about that. That's completely up to all of you. I understand this is a very opinionated company at the moment. A lot of people are saying that it's amazing. A lot of people are saying that it's about to dump. So I'd like that to be completely up to you. I just wanted to deliver my ideas, and of course always do your own research. None of this is financial advice. So thank you all for watching. Let me know in the comments whether you bought in or whether you didn't, and let me know why as well. Thanks for watching, and I'll see you all in the next video. Thank you all very much.